Nvidia stock has seen better days with shares down at least 20% year to date, especially as tariffs uncertainty is looming and some recent concerns about slowing AI investments. And investors are now wondering, is this semiconductor giant still positioned for long-term growth? Today, I'll break down Nvidia's position in the AI revolution, analyze the potential storms on the horizon, and give you my prediction for where this tech giant will be 5 years from now. Let's get started. Let's start with Nvidia's recent performance, which has been nothing short of spectacular. In its fourth quarter earnings for the fiscal year of 2025, released in February, Nvidia reported record quarterly revenue of $39.3 billion. This figure represents a 12% increase from the previous quarter and a massive 78% jump from same period last year. The data segment, which includes Nvidia's AI computing products, was the standout performer. Data center revenue reached $35.6 billion, up 16% quarter over quarter and 93% year over year. For perspective, this single segment now generates more revenue than Nvidia's entire business did just a couple of years ago. What's driving this growth? Nvidia's CEO Jensen Huang explained during the earnings call that the demand for the new Blackwell AI system, a powerful computing platform designed for advanced AI tasks, has been amazing. Huang noted that Nvidia delivered $11 billion of Blackwell revenue in just the first quarter of its availability, which makes it the fastest product launch in the company's history. Now, let's explore the broader industry trends that could impact Nvidia's trajectory over the next several years. First, AI computing needs are exploding. CEO Jensen explained during the earnings call that new AI models require exponentially more computing power. Huang said reasoning AI models, which help AI systems think through problems step by step, can consume 100 times more computing resources than earlier AI systems. This increased demand creates a massive opportunity for Nvidia's processor. Second, we face the looming threat of semiconductor tariffs. President Trump has indicated that these tariffs could be coming very soon. Nvidia doesn't manufacture its own chips and relies heavily on TSM for production, so new tariffs could create significant cost challenges for its business model. Third, despite some concerns about tech giants pulling back on spending, like recent reports of Microsoft canceling 2 AI data center projects, the overall trajectory remains incredibly strong. Major tech companies including Amazon, Meta, Alphabet, and Microsoft still plan to invest a combined $320 billion this year in artificial intelligence technologies and data center. Let's look at the bull case for Nvidia's future. What could go right over the next 5 years? For starters, we're only in the early stages of the AI revolution. During the earnings call, CEO emphasized that every company will have either rented or self-operated AI factories in the future. Nvidia has only seen the beginning of consumer AI applications, with enterprise AI, physical AI for robotics, and regional AI development still in their earliest phases. Additionally, Nvidia maintains an incredible dominant position in AI processing. Its chips account for somewhere between 70 to 95% of AI processors globally, a lead that competitors won't easily overcome. The software ecosystem built around Nvidia's CUDA platform, a programming model that allows developers to use Nvidia GPUs for general computing tasks, creates a powerful advantage that keeps customers committed to Nvidia's product. Finally, the potential market is absolutely massive. Nvidia CEO predicts that data center spending could reach $2 trillion by 2030. Traditional software is increasingly being replaced by AI-powered applications across nearly every industry, which creates an enormous growth runway for Nvidia's products. Of course, for the bear case, several significant risks remain. First, tariffs. Uncertainty could create severe impact to Nvidia's business model. If the government imposes semiconductor tariffs, Nvidia would need to either absorb higher costs or pass them along to customers. Either option could hurt profit margins or reduce demand for its product. Second, a broader economic slowdown could affect tech spending. If major tech companies pull back on data center investments due to economic concerns, Nvidia might experience lower growth. Microsoft's recent project cancellation reports provide an early warning sign of this potential risk, if true. Third, competition continues to intensify. While Nvidia currently dominates the AI chip market, competitors like AMD and Intel are working hard to capture market share. Many large tech companies are developing their own AI chips as well to reduce their reliance on Nvidia's products. Now, if you're considering investing in Nvidia, there's one critical metric you should watch closely, and that's data center revenue growth. This segment now makes up over 90% of Nvidia's total revenue and directly reflects the health of AI infrastructure spending. In the latest quarter, data center revenue grew 93% year over year to $35.6 billion. Any significant slowdown in this growth rate could signal weakening demand for AI chips or increasing competitive pressure. Pay particularly attention to the Blackwell platform adoption rate, as Nvidia CEO highlighted that this new architecture is the key to handling the next wave of reasoning AI models that require substantially more computing power. Now, given all these factors, here's my prediction. I believe Nvidia will outperform the broader market over the next 5 years, though not by the same astronomical margin we've seen recently. The combination of Nvidia's overwhelming market dominance in AI processors and the massive growth runway ahead creates a powerful foundation for continued success. We are witnessing a fundamental shift in computing, from traditional CPUs to AI-accelerated systems, and Nvidia leads this transformation. Tech companies continue to invest hundreds of billions into AI development. The technology expands beyond consumer applications into enterprise and industrial uses. These trends benefit Nvidia tremendously. Its processors will likely remain the standard for AI computation, even as competition intensifies. Will Nvidia see similar gains as it has over the past 5 years? Very doubtful, but its leading position in AI processor, I firmly believe, still has the potential to outpace the broader market over the next 5 years. Ready to discover more great investment opportunities? Go to fool.com/invest to receive the top 10 best stocks to buy now. That's it for today. If you found this insight valuable, hit that like button, subscribe for more, and help make our community smarter by sharing your thoughts and insights in the comments below. Stay foolish, and we'll see you next time.